Hi everyone, welcome back. In this video, we are discussing basics of structural quality. As you will know further in the course, we are not only discussing the setups, but we also recognize that fundamentally the same setups that like formally are the same, they are actually not the same because they can be of different quality. And in this video, we will start to discuss the topic because we will have qualities of supply and demand zones, of context overall, and even the quality of our mindset and of our prior behavior. But today, let's just start with this idea that not every move is the same and not every break of structure is the same. Not every context is the same. Sometimes the market, for example, is in a clear downtrend, like we see here, and sometimes the market starts to consolidate in a sideways price action, and then for us maybe it will not be such a clear trend in market. So again, just a quick disclaimer. Maybe don't try too hard in this video to understand everything and to have all the answers right away in this first section, because we will return times and again to these quality issues and quality questions. So first of all, why do we need structural quality? Why do we want high quality structures? Clear structures, clear moves. Because high quality for our strategy means higher probability. So first of all, we will have like these 5 short rules to begin with. First is clear move. So clear move is when the impulse is clear. That means with no slowings in the middle or consolidations in the middle, and a confident break. Okay, that right away I will say that if the impulse is not clear, that does not mean that we can't trade it at all. But if this quality is there, then we understand that in front of us is a better quality setup, higher probability setup, and we need to differentiate. And on the other hand, when you don't see a clear move, then maybe you will have a decision to stay away from the trade. And you will use everything I will discuss when you will find your actual setups. So let's quickly just go through the chart and find clear moves and not clear moves. Okay, so this move is pretty clear. Even though it has these slowing downs, it's just one push and a clear close below the structure. Okay. Instead, this move, even the candle closed below the structure formally, as you see, it closed right, just barely closed below the candle. And so we can say that the break is confident. Instead, in the future, we will discuss the concept of absorption, and it's probably the case for this. And by the way, you see, like the candles, they are smaller here before the break, and this is something you can consider as well when you have like the same size of the candles, and or even a bit bigger and bigger candles while we are breaking the structure. Yeah, and by the way, with the time you will naturally come to understand. So this move is pretty clear, this is like a clear push, this is a clear push. This one is somewhat average, so let me zoom in a bit so you can have yeah, so this is like a part where discretion, it seems like this all is a discretion, But when you will backtest for yourself, you will notice that like high quality moves, they tend to hold better. So you see a lot, some slowings down, and the move is like quite, it's average, not the worst one and not the best one. So let's move further. Again, you see this move. Yes, that's a break, but we have these slowings and candles here. I just started to decelerate, you know, and I don't like, for example, such moves too much. This move is quite nice. Okay, so this push, yes, it's not perfect yet, but it's okay. This one is a clear push, but not perfect. Yeah, not perfect. I will emphasize when I will see like really nice ones. Yeah, so this is like a clear move, of course. And by the way, just to reconfirm this, to emphasize, all these quality rules, they should be treated together, okay, in confluence with each other. So because sometimes, so this move is pretty clear, though it's not perfect, but it's a bit overextended. I personally don't like overextended moves. So this is like really clear move. This is clear move. On the contrary, so this is a clear move. This is not a clear impulse. So this price action is not impulsive at all. So I'm not referring to break of structures every time, but I just want to show you how different moves are looking at. So you see, if you trace the VIX, you will have this kind of price action. So if you see the price on fractal basis, then you will have just flaggy move. This is also, the candles are small and not impulsive. We can't consider it like clear move, clear break of structure. So this is like a really nice, really nice push. You see, starts with smaller candles and then bigger candles, like really nice push. And you see how it held, how the structure held and created a new really nice push to the downside. Really nice push. So yeah, this is one of the most perfect impulses, because you have full body candles. Yeah, full body candles, almost full body candles. And yeah, this is really nice. So full body candles are a great indication of clear moves. This move consists of a lot of wiki candles, which we don't really like for high quality setups. That one, so I don't like this beginning, but the end is quite nice, and the close above the structure is confident. So this candle is not a confident close, it is a break of structure technically, but not confident. This one is much better in my opinion. Yeah, sometimes the move can be just one candle, or these 4 candles with one full body candle, like this one, you see, and it holds. Yeah, so this is clear move as well. Sorry, so this clear move as well. So for now, that's fine, I think. Now, so where is our text? Let's go back to our text. Oops. So now, second indication of high quality structure is not extremely overextended in relation to other moves. So average size clear move is better compared to an extremely overextended clear move. And what I mean here is just based on my experience, is that it's usually really nice to trade like small or average sized moves. They usually tend to keep the structure in order, you know, and then when you have, so let me switch to USD and then when you have moves like this, you see, so this is like an average size movement, and this is just extremely like chaotic, the move that brings disorder to the market. And yes, it held in this instance, but you see what happened after this move. So it just fell off, like really overextended compared to the previous price action. And again, yeah, I know that maybe some of you want like exact numbers right now, but for what I'm talking now is just obvious overextension. And what tends to happen after these moves is that market will just consolidate for some time, because this move, it like you know, destroys the participants of the market, so to say, or just destabilize. So it brings instability to the market, and market needs a lot of time to restore its previous trend or just decide on future movement. So when you see such kind of a big move, for me it's a clear indication to stay away from this market. And then even if the market will come back to some supply zones, most likely it will create so much inside structure that this zone can lose its importance in the future and just break with this inside structure moves. So let me show you more examples on USD because we had them recently. So you see, like really big down move compared to previous moves, and it by the way didn't hold. So I think participants of the market could think that, okay, this is like a real great break of structure, but for me it's not a good break of structure, okay? And instead look how the market, when it holds the trend, how it moves. It moves in this nice clear average sized impulses. So you see, like it seems like nothing too special happens, but it holds, yeah, sometimes break, but then it starts to hold the structure again, like pretty small move, pretty accurate, but it's nice looking, and it really holds the structure. You see, it's bullish, then bearish for some time, and starts again, like small move, and we go small move, like bigger move, some consolidations, and we go. So average size clear moves, and again you see it all continues, like small move, but it gives you nice entries, and then you can continue to your entries. Yeah, this move is a bit overextended compared to what happened before. Okay. So that was the second part. Now, no rounded deceleration after break of structure. So when we have a break of structure, what we usually want to see is, so on schematic, it looks like this, a break of structure, and then market just starts to go to the zone. So this is nice, this is high quality, and lower quality will be this. So this is a level for break of structure. Market breaks the structure and starts to slow down after break of structure, and then maybe do something like this, and start to create inside structure, and then goes back to the zone. So I don't like this setup, okay? What I really like in structure, what I noticed works better, is a break and then a relatively short term pullback that looks like a wave, you know, that is more looking like this perfect trend examples. Yeah, that of course never happens, but here is what I mean. So you see, we have a break, and then market just starts a pullback, and that's all. And then the market holds the structure. And here what we have is a break and then some deceleration in the end. Not critical bad. Again, you can have decelerations, and you can have not clear moves. Sometimes you can trade extreme moves. That's all fine, but just be aware of quality rules, and they will help you to to maximize your probabilities. Again, we have impulse, no deceleration before the pullback, and come back to the zone. So I like such examples. So we have an impulse, a bit of deceleration, but not too much. Imagine the market did a price action like this. So for me, it will lower the quality of a setup. So let me show you a couple of more examples. Oh, so yeah. So this is kind of an example of deceleration, but not exactly, to be honest, because market went down and then starts a pullback and then started this consolidation afterwards. So yeah, probably this one is a good example of a bad impulse. Yeah, so the move is not clear, the break is not clear, and market just decelerated after the break, and yeah, and then just failed. This is an example of a nice occasion where we have an impulse, no deceleration, and a pullback. Impulse and a pullback. Impulse, pullback. You see, so just how we can imagine it on a perfect situation. So this one is bad. So some kind of a move and then deceleration. We don't like. So we don't like this. We like this. And last ones. So maybe. So this is like average quality. We have an impulse and then some kind of deceleration. So it's hard to say. Yeah, it's hard to say. Like it's more like a deceleration or a pullback was just a flag. But I think you got what I mean, at least as some basis and at least something to look for. Then next one is trend and price action that didn't generate too much of an inside structure. And what I mean here is when you're looking at the market, it really helps to have a market like on Euro USD, you see. So what is a trending market? Yeah, for our strategy is when we have, so in perfect situation, we will have an impulse that breaks structural level. We will have a zone which we will discuss later. We have a pullback, confirmation, and continuation. So this is like a perfect example. Instead, when we have a break and then the market just starts to generate lots of inside structure for like 2 weeks, you know, then sometimes it means that this zone will not have so much importance anymore to this market, and it can easily break it. Not always, but what I like in my practice is to have something like this. So let's just quickly look at this example. So this is an example of lots of inside structure, you see. So we have an impulse. Actually, we had an impulse from here, if you will see, if you will be really careful. So an impulse, and then just inside structure starts to build over a course of 2 or 3 weeks. And for me, it's like really lower quality, and you see it breaks to the upside. Instead, when we have an impulse and then a pullback with a confirmation, market just starts to go in one direction. And then you can have like a lot of inside structure, maybe then a bit smaller amount, and almost no inside structure except of a pullback itself. So this is okay. So we have like several waves. This is quite okay. So nothing too interesting here. So we had, again, we have this impulse, and then inside structure started to generate. So on higher time frames, it's more or less okay, because we allow the market to generate these structures to have some liquidity to go further with the trend. But overall, it would be even better that the market just did this and this, clear mitigation, and go lower. Like in this example, you see market went here, one pullback and continuation to the downside. But now, of course, market started to generate this inside structure, but even with that, we are still looking to go bearish. It's just when we will look for confirmations or our middle time frames, which we all, again, anything you are confused about, that means that we will discuss it later. But again, on confirmations, when you are looking at confirmations, it's much better to go inside these moves and not these kind of moves. Now, let's go further. So where is our text? So this is when we have some kind of a trend, it maximizes the probability. And then at least 2 consecutive breaks of structure when you are looking at analyzing the context or anything like that. Again, EURUSD is a good example actually, because look, we have this range, and this range broke this structure. So this is one break. But if we go and analyze from left to right, we will see that we had this range, we had this break. So we actually had, so we have bullish, we have 1, 2, 3 breaks. And before, so before we had one bullish break. And by the way, again, good example. So before this bullish break, we had bearish break, bearish break, bearish break, bearish break. So 4 breaks to the bearish side, and then 1 break to the bullish side. And then when you look at this range, you are not telling that this is a high quality setup, because it's just 1 break to the upside. Remember basic rule that when the market is moving like this and shows at least 2 consecutive breaks to the upside, this is like a really nice place to look for continuations, because it means that the trend is established. And instead, when the market is moving down like this and then shows one break to the upside, we can't say that the trend really changed. As we will discuss further, this indicates more likely a redistribution. So yeah, and then look what happens. We have a break and we have a break. 2 breaks consecutive. So this range is of high quality for us, except that the break is not like really confident. But then you have this 1 break, 2 break. And really nice shift, confident close, not too much of inside structure. So this is like real high quality price action. Yeah, so I hope it's clear. Now, your homework is to make notes of this and to send me 5 screenshots that illustrates every one of these rules. So a screenshot with a break with a clear move, a screenshot with a break with not extreme or overextended. So, and I want you to find separate moves for all of these. And if you want, then once you have separate screenshots for every quality, you can have like several more screenshots with confluence of every quality together. Okay. Yeah. Hope it was not too confusing. Again, it's just intro. When we will do like weekly outlooks and discuss trades, we will address these qualities, and we will have quality levels for setups themselves, because what we just discussed in this part of the course is just first part, is the structure. Okay, we'll wait for your homeworks. Please don't skip it. It's very important, because this is the part where we are working actually one-on-one. Yeah, and we really work and do the real work to improve your trading. Okay, see you in the messages.